Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, DeepSeek Monday, a global market sell-off on the promise of a new artificial intelligence model from China.
It was more human. The reasoning is shocking. I mean, there were moments where I was like, oh my God.
Is it better than what we're building in the U.S.?
This feels like the Sputnik moment for the AI race.
And what are the national security concerns? Former Congressman Patrick McHenry weighs in.
Faster, better, and cheaper still wins, no matter if it comes from a communist state or from an open society.
But CEO of AT&T, John Stankey, says it's AI innovation's early innings. We may need to get used to news waves like these.
I think we're going to see chapter after chapter where we wake up one morning and somebody has a better mousetrap or does something a little bit different. And we should expect that because certainly the internet and the business models on the internet today don't look the same that they looked at like in 2000s.
Plus, the Trump tariff threat that shook South America.
There could have been an all-out trade war of some sort. The president in Colombia at one point was going to put tariffs on the U.S.
It's Monday, January 27th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everyone, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today. Let's take a look at what's been.
We start this Monday with a massive market sell-off. U.S. technology stocks, the chip sector, and energy companies all dropped in pre-market trading, rattled by the swift rise of a Chinese artificial intelligence startup called DeepSeek. The company's latest AI model, an open-source, large language model, rose to the top of the Apple App Store over the weekend, displacing American OpenAI's ChatGPT. And the buzz is that DeepSeek is better. It's trained for real-time problem-solving and reasoning. Last week, leaders in technology told us at the World Economic Forum in Davos that they were watching this competitor. Microsoft's Satya Nadella.
We should take the development out of China very, very seriously.
Scale AI's Alexander Wang.
What we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing or roughly on par with the best American models.
And Anthropic's Dario Amodi.
If the United States can't lead in this technology, we're going to be in a very bad place geopolitically.
This is all interesting timing with the announcement last week, fresh off the inauguration at the White House, of Stargate, a $500 billion investment in AI data center infrastructure here in the U.S. The flashy photo op with President Trump and Oracle's Larry Ellison, SoftBank's Masa Son, and OpenAI's Sam Altman made headlines and raised questions about whether this money, this $500 billion, existed. Elon Musk took a swipe at it, and Microsoft's Satya Nadella slyly directed the spotlight away from the stars and back down to the $80 billion investment Microsoft has made in its own data AI center build-out.
Look, all I know is I'm good for my $80 billion. I am going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know.
The AI race, it's on, it's rough, and now it has a new kid on the block. Let's get back to Andrew and Becky.
Let's talk about DeepSeek because it is mind-blowing and it is shaking this entire industry to its core. The emergence of DeepSeek now putting pressure on the U.S. tech names. We told you all about it last week in Davos. The buzz started growing about DeepSeek's latest AI model being more efficient while running on a lot less advanced NVIDIA chips. Released last week, it's already being called what is a major breakthrough as the app shows its work, its reasoning, it answers users' prompts. I, by the way, was spent basically all weekend playing with it. It is the #1 app, I believe, on Apple right now. The product overtaking ChatGPT today as that on the App Store that way. Now, you can take a look right now at the AI-related stocks. So NVIDIA, ARM, AMD, Microsoft, Meta, interestingly, on that list, given its open source. We got to talk about the open source, closed source bit of this as well. And
but that's a shocker to see NVIDIA down by more than 12% right now.
Absolutely. And then you have global chip stocks also in the red across the board, ASML Holdings and others. There is the question, I will say, Alexander Wang made the point last week, and it's become sort of the question mark about all of this, which is, he suggested on our air that it is possible that they were using some of the highest performing NVIDIA chips, perhaps as many as 50,000 of them, to build this model. Now, and they weren't supposed to have those chips.
Right.
If
so
that's
the case,
true,
not the size.
The dynamic is different.
Yeah.
If it's not true, then maybe all bets are off. It's possible, by the way, even if it is true, meaning even if they use those chips to create this, or at least partially to create this, it is still a significantly more efficient and better model. I think everybody agrees that right this moment, I mean, I don't know if did you get to play? It is mind-blowing.
It looks really great. I mean, it feels like it's open source, so people can test this out themselves.
But I can tell you, all the tests that I do just to see whether I think the writing is better, whether I think that it can answer certain questions. Yeah. I mean, it was not only faster, it was more human. The reasoning is shocking. I mean, there were moments where I was like, oh my God. We are so much. You could feel the step change as a person. I will also say, as exciting as it was, there was an element where I became scared because I thought, I had the opportunity to talk to all these people last week, and they all said the future's here, and and then you sort of see it, and you go, oh, okay, I feel you, in a different sort of visceral way. So yes, I think this is all happening at a level that when you mark your sort of AI history timeline in life, I think this past week, today, and everything else will be on it.
I think Mark Andreessen put it really succinctly and really smartly when he said that this feels like the Sputnik moment for the AI race, where China is really stepping in. So not just what it can do, but what it means for American dominance in AI, what it means for the Chinese being able to step in, and to have the Chinese actually open sourcing it, meaning that is going to be what goes around the world, and to have the cost factors that go into this. Huge step up and change, and puts us a little bit on our back foot in trying to figure out what this means. Well, I actually wonder, Satya Nadella, would he tell you again today that he's still good for the $80 billion?
I think they still are good for the $80 billion. I think actually I think the processing power issue is there's an element of which you're going to still have to have the current sort of efforts underway. I think the question longer term, I think it's a longer term question.
Can you recoup your investment? I mean, can you recoup your investment if that's the case?
Well, I think this is the big issue. And I think
who's going to pay for it if they get it
At one point, and
elsewhere?
I don't know if we talked about it on Squawk or it might have been on Worldwide Exchange, one of the things that I was hearing that was fascinating out there is there were so many CEOs who were saying, you know what, I'm using OpenAI and I'm playing around with Anthropic to figure out what I need to do. And then, which is expensive for us, and we don't really love that. So we're playing around with what we need, and then we're trying to figure out how much of it we can replicate using Llama, which is the meta version of it, but it's open source and effectively, therefore, free.
Well, and you can have some control over it, too, as being open source. You can do things that you end up this way. You're not so beholden to OpenAI.
But to me, that's the issue. So here we have a situation where if people are already starting to move towards open source models, and I don't think that have been talked about publicly, really.
Right.
That's a whole kind of paradigm change.
Just back to the question on Microsoft. Microsoft shares down 6.8% this morning. Is there a point where Satya says, okay, maybe I'm not good for the $80 billion?
I don't know. I think he's still going to need this technology over the next 5 years. The question is, can he go, is he going to start using DeepSeek? By the way, there's a separate question, which is, if we think we have a problem with TikTok.
Oh, I thought this instantaneously.
If we think we have a problem with TikTok, do we have a problem with this? Now, interestingly, this is an open source
so you
model.
can take it and do your own stuff with it.
You can put it on your own.
So they're not
computers.
owning unless there's something in it that we don't understand.
Right. They talk about Project Texas with.
But I thought the same thing.
Like
TikTok looks like posers play compared to what this could potentially be. Although this is OpenAI, so you can take it and source it yourself and figure something out from it. So you're not storing it on their servers.
Anyway, it's fascinating. I think I don't know. We should call Satya, get him back, because the truth is, he does need some form of AI, for his Copilot and all of his other software.
Sure, but does it have to be?
Does it have to be OpenAI?
And is there a way to do it more cheaply and not have to spend $80 billion?
I think the question is probably that over time they're going to have to spend less money. I don't know if you saw, he put out a tweet just overnight called I didn't know about this. It's called the Jevons Paradox, and he links to a Wikipedia page, which I'll read to everybody if you'd like. In economics, the Jevons paradox, sometimes referred to as the Jevons effect, occurs when technological progress increases the efficiency with which a resource is used, reducing the amount of necessary for any one use. But the falling cost of use induces increased demand, enough that resources used is increased rather than reduced.
Could be, but does he still need to spend $80 billion to get to the same place? Could he spend $50 billion and still get the same out of it if you can find ways to do this more cheaply, if the architecture structure is such that you can actually get more efficient with all of these things, maybe he doesn't have to spend the $80 billion to get to that point.
I think he may still need to, just because of the abundance of how much processing power. I mean, look, the guys who are, this DeepSeek, for the most part, people are now running on their own laptops and doing all sorts of things, so their computers are not overwhelmed. But if you decided you were doing this in the cloud, or there was going to be a cloud-based version of it, you'd still need a lot of processing power. I will say, just on top of his tweet, and this was just 5 hours ago, he says, the Jevons paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity.
Correct.
We just can't get enough of, though. And so they just can't get enough of piece of it may be the thing that hopefully helps them longer term, but still, I think it's a big question.
Right, and if you're doing it so that consumers are basically doing this for free, it's just who's paying the way on this? Are companies going to pay? Are they going to find cheaper ways to run some of this stuff themselves too? Right. Just a lot of questions this raises. Also raises the question again as to whether the $100 billion that's been promised by Larry Ellison and Sam Altman and Masa-san, is that going to still materialize? Because they still have to raise a lot of this money, right? To get
so
to
I think actually that is the right question. I mean, even the bigger question.
Well, that is going to be a tougher one, because who's going to give them money for this? Satya may still have a lot of money that he's going to be spending to find his way to find Microsoft's piece of it, and that's different. It may or may not be $80 billion. He may not need it, but who's going to raise money for this other OpenAI project that is exclusively supposed to be OpenAI? From everything I've read and heard on this too. So lots of questions about that. There were questions already if they had the $100 billion, let alone to $500 billion. Now what? Now what do you do with this? But bigger issue is going to be for investors today, how this changes the landscape, because you can see Broadcom, NVIDIA, Micron, Constellation Energy just changes across the spectrum.
And by the way,
everybody's trying to figure out what this means.
That's what you're thinking about, like
the energy needs,
the energy needs change.
The energy needs that go along with all of this, because we had all these questions. And by the way, we've been saying all along, energy is going to have to be more. We're not going to be able to do these things. And everybody says there's always technological change that comes along. They thought it was going to be for the grid. Maybe it's just for the AI needs itself.
New overnight, the U.S. and Colombia pulling back from the brink of a trade war. At issue is this. President Trump threatened to impose 25% tariffs and economic sanctions on Colombia. That was in retaliation for the government there refusing to allow 2 military planes with deported migrants to land in the country. Apparently, they had been authorized originally and then were turned away. Trump said he would immediately impose the 25% tariff that would increase to 50% in a week. But then late last night, the White House announced that Colombia had agreed to President Trump's terms, including the unrestricted acceptance of illegal aliens from Colombia returned from the United States. Colombia's president had earlier condemned the military deportation flights, saying he didn't believe there was dignity involved with it. Colombia said he would welcome home deported migrants on civilian planes and offered his own presidential plane to facilitate their, quote, dignified return. There were questions about how much coffee would cost, given that, of course, coffee beans, the capital of the coffee bean world. Starbucks, by the way, relies on so many of them. And so there could have been an all-out trade war of some sort. The president in Colombia at one point was going to put tariffs on the U.S. I mean, it was sort of a wild situation, and appears, at least for now, to have subsided. And the question is,
Colombia, I think, has even tweeted out the White House's press release.
And does the message, therefore, get sent to other countries about the return of migrants, how that's all going to work? Apparently,
I think you look pretty closely at this.
Some of the other South American countries, though, are apparently now talking to each other about sort of banding together in terms of how they're going to accept migrants back, how they're going to work on these things, so they have some more leverage. I mean, it's interesting. Colombia had very little leverage with the U.S. on these things.
I think it's our third largest trading partner in South America.
But if all of them get together and decide that they're like a block, then it gets more complicated. So it's very interesting to see how all of this stuff is playing out.
It happens in such fast time, too, because usually you go through the bureaucracy with this. This would be something where different departments, whether it's ICE, the State Department, all kinds of different departments would be kind of coming up with plans for this, presenting them over the span of days and weeks. This happened instantaneously. Well, President Trump just said, here, I'm going to post what I feel about things. It all carried out pretty publicly in social media in very rapid time. So a very different way of going about things and doing business.
Tease will be next.
Coming up on Squawk Pod, AT&T's fourth quarter profit is up. CEO John Stankey weighs in on the tailwinds for his business.
Connectivity and networking is becoming more and more important. Things like upstream bandwidth, because of what's happening with user-generated content, workloads that are going up into the cloud are becoming more important. That all plays into our strength.
Plus, it is the story of the day, how DeepSeek, an AI competition, is affecting a 140-year-old company like AT&T and its peers. Right after this. This is Squawk Pod, today with Becky Quick and Andrew Ross Sorkin.
Up and Becky, Q.
Good morning, everybody, and welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. AT&T out with quarterly results earlier this morning. The company came in with numbers that were better than the street was expecting, and that stock right now is up by just over 2.4%. Joining us right now exclusively is the company's CEO, John Stankey. And John, welcome. It's great to see you this morning.
Good morning, Becky. It's good to be with you.
Let's talk a little bit about what you're seeing. The numbers came in better than expected on every metric that I'm looking through here. Earnings per share, revenue, free cash flow, postpaid phone net adds, and the full year number was better than the guidance that you had just given the street in December at an analyst day meeting. What happened in the last weeks of the quarter?
Well, I think you kind of touched on the important thing is we set out some guidance for the year, and across the board, we consistently met or exceeded it. And that's exactly what we set out to do, which is to simplify the business and get ourselves into a position where we're executing more consistently and have the confidence that we can deliver on these things. And that's one reason why at the analyst day that you referred to, we laid out some 3-year objectives of what we think we can do. And I think effectively what you saw in the fourth quarter is that the business continues just to perform extremely well, and we're very disciplined. And when you're in that position, sometimes you get a little bit more momentum, and that's what you saw in the numbers.
So demand for 5G and demand for fiber looks strong. Verizon had stronger numbers last week, too. What would you say about the overall operating environment right now?
I think what you're seeing is that, the products and the services that we put out to the market are really critical and important. And it's a combination of the value that consumers get out of them, the utility that they're able to use them for. And then we have kind of a secular dynamic going on here where connectivity and networking is becoming more and more important. Things like upstream bandwidth, because of what's happening with user-generated content, workloads that are going up into the cloud are becoming more important. That all plays into our strength. And so, we feel pretty good about the dynamics of what's happening overall and how the economy is structured, how technology is moving, and that helps a business like ours.
Does that continue into the first several weeks of January, too?
Well, it's, obviously I don't want to announce something that isn't public, but, we continue to see customers want to use the product in a strong way. There's always, when you come out of the Christmas holiday season and the sales that go on, there's always a couple of choppy weeks that occur right after that as everything settles back in. And we're seeing that same dynamic go on in the market right now, but typically we have a pretty good handle on how these quarters play out once they run their full cycle, and I don't expect anything different here.
John, your stock is up by better than 2.5% this morning in a down market overall. There's a whole lot of questions about what to make of this new AI competitor that's on the scene from China. And people are trying to figure out what this means for U.S., what kind of CapEx spending we're going to continue to see in these areas, if there's a way to do it more efficiently, more effectively. I realize this is not something that impacts you directly, but you play in the data centers. You know what's going on in the tech business. What's your thoughts on what we've seen so far?
Well, look, I'd step back and say we're at a seminal change right now. It's just as significant as kind of the commercial founding of the internet at the end of the 90s. If you want to go back to the mobile revolution, this is going to be a major seminal change. And we're in the very early innings of it. And there are issues that have to be worked through to commercialize it effectively, whether it's power consumption or the number of chips that are available or the best way to structure models. There's going to be a tremendous amount of innovation and change that comes through the latter part of the game as we move through it, especially given that we're in the early innings. And so I think we're going to see chapter after chapter where we wake up one morning and somebody has a better mousetrap or does something a little bit different. And we should expect that because certainly the internet and the business models on the internet today don't look the same that they looked at like in 2000. So this is just going to be the dynamic, and the pace at which this occurs is probably going to be a bit accelerated over historical levels.
I mean, how do you adjust accordingly to that? And I ask kind of in the context of a deal you did last week. You did that $850 million sale of the leaseback transaction where I think you're taking 13 million square feet of space, 74 properties that were old data centers that you're not going to need as you get away from some of the copper lines on some of these things. And you sold that off, and I think you get a continuation of that piece. It's a little different than what Verizon is doing. I think they're trying to turn those into data centers that can use for AI. Why don't you talk about your strategy and what you're doing there?
Yeah, it might be a stretch to call some of those properties data centers. In many instances, they were central offices with pretty old telecommunications equipment in it. And I think what we're attempting to do and what we will do is we're very cognizant of where we need to keep traffic aggregated in the network so that we're able to manage latencies over time. Those critical properties where we think they have needs over the long haul, we want to make sure we're investing in them to be able to take advantage of the round trip times that we can deliver on our network. We'll do something different with those. But in this case, we had what I felt were some underutilized assets. You know, we've got thousands and thousands of these things. Many of them are out in hamlets all over the United States. And we think we can probably do some things better with them. And more importantly, the arrangement doesn't cause us to leave those facilities. They allow us to use them in a different way so that we can still operate our business from them.
Hey, John, I have a question about the regulatory climate and mergers and acquisitions over the next 4 years, which is to say, in a post-Lenacon world, do you believe that some of the big cable providers, for example, that will compete in some way with you, will be allowed to merge? Would you be able to do deals that you wouldn't otherwise be able to do? And in the emergence of a Starlink and potentially a Kuiper, which is going to be the next development coming from Amazon into space, does that change the dynamic with which we think about what the landscape looks like in terms of connectivity, because all of a sudden there's more players in it than there used to be?
Sure, it does, Andrew, and good to see you. I would tell you that I sit here today and believe the policies that have driven investment in our industry have been the right policies. And what you've seen as a result of that is consumers have choice for different ways to get on the internet now, whether it's through fixed wireless technology that they can buy, or is it satellite, or what they can get with fiber, with record investments in fiber this past year. So the policies that have been pro-investment have been really critical. Does that afford the opportunity for asset reconstruction in the industry as a result of that? My guess is probably yes. I wouldn't be surprised if we see some players that we compete with making some decisions that say that they need to bolster the strength of what they can do from the broadband side and the kind of infrastructure they have, and the importance of marrying mobile with fixed technologies. In our case, we feel really good about where we are. We have a set of plays we started running 4 years ago. We got a great nationwide wireless network. We've got the leading fiber network in the U.S. We're investing at a clip where we can organically grow. I'm anxious to continue doing that and kind of continue running the plays that we're running. But I do expect there are going to be others in the industry that step back and say they need to maybe change their hand a little bit and restructure things.
John, let me ask you just about the debt position. I know you reduced leverage in the year, reduced the debt by about $9 billion to close to $120 billion. You're under 2.7 times leverage at this point. I think you're on a path, according to Pascal Desroches, to be at about 2.5 times leverage at the middle of the year. What kind of progress are you making on that? What do you want to tell the street about?
We're absolutely delighted. The team's worked really hard. To your point, we're under 2.7 right now, which is great. And we do expect we're going to, by the midpoint of the year, we'll be around 2.5 times adjusted net debt to EBITDA. And as a result of that, that's going to drive a change in our capital allocation profile that we communicated in our December Analyst Day. We feel real comfortable at that level, especially given the remaining portions of the balance sheet, which are structured at very long maturities and very low interest. So that's kind of a competitive advantage if you think about what we've got in debt structure right now that we're using to invest in key long-term assets like fiber. That's a healthy combination for leverage over the long term. And as a result of that, be able to take more of that cash now and return it to shareholders, continuing with our strong dividend, and then adding to that a share buyback where, we'll probably do about $20 billion over the next 3 years. So it's a really important point, really a lot of work by the AT&T team to get here, and couldn't be more pleased with what we accomplished in 24 to make that happen.
And John, I see you've got the AT&T Pebble Beach Pro-Am logo on your shirt. I take it you're headed out there directly. And what is it? You've got Scotty Scheffler and Jordan Spieth both making their debuts for the season out at this event.
Yeah, it's my 1 week a year wardrobe that I get to wear it. So I've broken it out.
It's and your uniform.
Unfortunately, I got a few things to do before I can get out there this week, but I will eventually make my way out there. And we're excited about the tournament. I talked to Jordan last night. He's ready to go. He feels really strong about where he's at, and we're excited to see him return and compete, and maybe I'll be able to realize my dream and hand him a trophy at the end.
Well, we look forward to seeing all of that coverage over this week and this weekend. And John, thank you very much for joining us today.
Thanks for having me in.
Up next on Squawk Pod, we are going deeper into the DeepSeek story with a guy who legislated around international technology, former U.S. Congressman and head of the Financial Services Committee, Patrick McHenry.
This is so complicated. We are an open society with a rule of law competing against a closed society with no rule of law in China.
We'll be right back. Welcome back. You're listening to Squawk Pod from CNBC with Becky Quick and Andrew Ross Sorkin. Here's Andrew.
It's our next guest, fresh from the halls of Congress after a 2-decade career there. He joins us on President Trump's first week in office. Confirmation fights completed now, still a number ahead. I want to welcome former U.S. Congressman Patrick McHenry of North Carolina. He most recently served as chairman of the House Financial Services Committee, and he's still wearing his bow tie, and we are very pleased to see you, sir.
Well, thank you.
Before we get into anything, just because it is the topic du jour this morning, the markets are selling off on the back of it. This DeepSeek news, China AI model that now seems to have upended at least a lot of our ideas around whether they should be open source, closed source, whether you need the chips, whether you need the energy to do it all. What do you make of this just from a national security perspective, a technology, U.S. being ahead or behind?
Is this our Sputnik moment or no?
Well, Mark Andreessen said this,
yeah, they did.
But we don't know. We're living in this moment where we don't know if this is real, whether or not this is effectively screen scraping, right, which is taking the best of our open source and their intelligence community using access to our closed source. Is that a component of this build out? We don't yet know. We also don't yet understand fully the data transfer that's happening with this new app. What we do know, though, and the fundamentals here matter.
Data transferring meaning are people's information at risk with going back to the Chinese government?
Is this a more sophisticated
Forget about
TikTok?
Right. Yeah.
Is this a much more sophisticated,
you believe this could be
deeper,
a mousetrap?
more meaningful?
So most of the people that are online don't necessarily, because it's open source, they think they can see inside it, they can see the programming, they can see. Now, I don't know. Maybe that there's some clever little mousetrap in there that nobody's spotted yet.
We don't know. But what is devastating, though, is if you have a new model that requires less compute, less chips, means less power, less infrastructure. This has a massive ripple effect where faster, better, and cheaper still wins, no matter if it comes from a communist state or from an open society.
Look, it's probably good news over the long haul, devastating perhaps for the companies that have built up so much on this expectation.
Right, and if you're a company like Microsoft or Apple, where you want to build the best widget and you have capacity to distribute it to your current customer base, this may be a fantastic thing for them. But stepping back, though, this is so complicated. We are an open society with a rule of law, competing against a closed society with no rule of law in China. And so I think the fundamentals of an open society and rule of law make us so much better to adapt and change. What they have just done with a closed society is bring something that's open source, open society. It is such a different outcome than anyone expected 6 months ago, 2 years ago, 5 years ago from China.
I mean, to be fair, you can't criticize Xi Jinping or ask this AI to do it. You can't ask them about Tiananmen Square. It's not authorized to do any of those things.
No, but that's what every American national who does business in China says, that's the entry price. You can't criticize the regime. There are all these limitations on civil liberties and civil rights. Human rights abuses, obviously.
Deep Sense won't do it.
DeepSeek.
But
DeepSeek won't do it.
But what I mean is anything China is this.
Yeah.
But let's step back. There are two additional pieces here. One is U.S. capacity to ban things that they don't like out of regimes they don't like. The president has broad authorities, not just on tariffs, but on export controls that are meaningful, powerful, and are the death penalty for firms.
So would you block this?
Well, let's see. Let's see what is actually happening here. It could be blocked. But getting back to the fundamentals, that doesn't bring the globe to our regime. Our rule of law, speech rights regime, open society regime. It actually leads the rest of the world to go a different direction for us. But that's one point. And so the president's capacity to take action here is massive against an app or an adversary he doesn't like. We see this in tariffs. We're seeing this in tariffs moment to moment, hour to hour, and that will continue. But when it comes to export controls, the authorities of this administration, like the last one, are very broad, very deep, and quite meaningful.
Now, let me just ask you about sort of rule of law, because I think there's a fundamental question as it relates to TikTok right now, which is there was a bipartisan rule put in place, a law put in place, the Supreme Court upheld it around TikTok. There is now this sort of period of time, we don't know what this period of time is, where the president effectively says the law is not the law and we're not going to worry about it. And if you're Oracle or you're Akamai, you're saying, sure, I'll host TikTok based on the assumption that the president is going to effectively overrule the law or somehow change the law or do something. And the Apples and Googles of the world are listening to the Tom Cottons who said, this is the law, folks, and you can't do anything, so don't do anything. What should be happening here?
The courts still matter. The rule of law still matters. The president's opinion is powerful and meaningful in our regime for a period of time, but the courts and the law will persist and will remain, and I think that's the case here. Congress acted in a bipartisan way after a lot of contemplation on TikTok and trying to understand much more deeply about the data transfer and the risks associated with TikTok being in our society. Not just the social media is cancer risk, but the fundamental risk of the data transfers. So the law is a law. It's unlikely to change. Right. And all that's happening right now is TikTok buying for time via the president's opinion.
Put your former financial services hat on. I'm very curious what you think of the president believing publicly to Brian Moynihan's face and others that banks like Bank of America, and he name-checked Jamie as well, Jamie Dimon, JP Morgan, are debanking conservatives, whether you think that is something that is meaningful, persistent, in a systematic way.
By the way, speaking of you, and you've done a fantastic job, but I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Mr. President, I'll say that your friend Gianni said hello, told me to tell you hello, and we look forward to sponsoring the World Cup when it comes.
When the president says, quote, as he did on Friday, I'm going to do a number on the banks, right? We're doing numbers on the banks. what do you think that means?
Those are two separate issues.
Okay.
I hear them as two separate issues. And if I were still in Congress, I would see them as two separate issues.
Okay.
There's the issue of debanking, which is real. It is persistent. Look at Operation Choke Point and Choke Point 2.0. 2.0 was focused on crypto, and that is in fact the case. You had crypto firms and those that have major crypto assets get debanked.
I don't disagree, but the reason they were getting debanked, I think, at least was under the auspices that these were bad credits, meaning because of crypto, because of AML rules, that's anti-money laundering and other things, that the banks felt that they were going to be on the hook if these clients were part of their firm and something went wrong.
Okay, we have,
and they would argue it wasn't about the politics per se. It just happened to be that actually crypto, folks who love crypto, there happened to be a more sort of libertarian conservative group, I think.
Yes, but also in Choke Point 1.0, it was a set of disfavored industries across America that were actively targeted by the Obama administration. The Biden administration picked up where the Obama administration picked up with a different group.
Is this the administration forcing the banks to do this through the regulatory?
Well, yes, because you have the banks being pressured by their regulators under the current rule of law on AML, BSA, and now a new beneficial ownership
What is BSA?
regime. Bank Secrecy Act,
Okay, sorry.
which is a misnomer because it gives the government access to your bank account and major distributions from your bank account, either incomes or distributions. So there is the rule of law issues that have to be fixed on AML, BSA, and the beneficial ownership regime. That is a legitimate policy set that the president is speaking of around debanking. And the complicated nature of technology interacting with banks.
Right.
That is a legitimate policy concern. The other policy concern the president has is the populist one. Elizabeth Warren has talked about this. The president talked about it on the campaign trail, which is a rate cap that I, as a free market conservative, am against. I think competition should bring down the interest rate, and a competitive marketplace should lead consumers and small business to have more options.
Rate caps on credit
Right.
cards.
Rate caps.
You said the same thing.
Sorry. But okay, that was Freudian.
I started. Sorry.
But that is a populist bent. This is the reason why Rohit Chopra, the head of the CFPB, appointed by Joe Biden, confirmed without Republican votes, still remains as the head of the CFPB.
So you think he's going to stick around for a while?
Well, I'm not sure. I don't know that Director Chopra is super excited about having Donald Trump as his boss.
He was on Friday and sounded fairly enthusiastic about the idea that there are areas that they agree.
The president has also raised questions about exorbitant interest rates on credit cards. And of course, he mentioned Brian and Jamie, Bank of America, JP Morgan Chase. They have a lot of power in the credit card market and have been raising interest rates mightily, much more so than the Fed has.
This is where the populist right and the progressive left meet. And it is a complicated place. And for banks to think this is a pure win with the Trump administration, dream on.
Okay, you got to come on back, in part because you have to teach us about how to do a bow tie. There's a lot to talk about there. But this was fabulous, and we can continue this with.
Well, if everybody wore bow ties, it might impact your viewership. So I don't want you to risk too much.
Okay, I might start wearing them. We'll see. I don't know what it'll do.
It's more of a threat, huh?
Thank you. It's good to see you.
And that is Squawk Pod for today, this Monday. Thank you for starting your week with us. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. You can tune in weekday mornings on CNBC at 6 Eastern, or get the smartest takes and analysis from our TV show right into your ears when you follow Squawk Pod wherever you get your podcasts. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.